means I have to take more than 1 hour. All right. So, ladies and gentlemen, here we are, and I'm making reference to this May 2016 question number 3, May 2016 question number 3. May 2016 question number what year? Question number 3. Question number 3. Question number 3. All right. So then we're reading together. We are told here quite a very simple question that I should be able to do with my eyes closed. My eyes should be closed. My eyes should be closed. There is no question there really. With my eyes closed, what do I have there with my eyes closed? So it's about a company known as who? A company known as Hasara. A company known as Hasara. Question 3, yes. A company known as Hasara. So we are told there, Hasara Limited, which has been operating in the telecommunications industry, has been posting successive trading losses. The directors at the company have made a proposal to reconstruct the company by transferring the entire operations of the company to a new entity to be called Zawadi Limited with effect from 1st April 2016. Now, ladies and gentlemen, please listen and listen to me very well. I would want to use a good example here. We have here a husband. We have in this case here a wife. Of course, at times, and many times, there will be issues. Not unless in this case here you're running a family that is too plastic. You know, families that are too plastic are the ones that pretend that everything is all right. In the morning, in this case here, they'll go outside there and say, my baby, today we ate what? Those kind of relationships, you know. If it is a real relationship, it must always be running into problems. So when it runs into problems, for example, this wife says, no. She goes in this case here to my parents. She even involves her parents. So we say that there is a problem, and then we decide that we are going to tackle the issue. And then we continue living normally. If in this case, ladies and gentlemen, this pretty good lady will not be going away, then automatically this becomes what we call an internal reconstruction. It becomes an internal reconstruction. You are changing for the better, but you are allowing, in this case here, these changes amongst yourselves here within internally here. You are putting in place schemes of work which will be able to enable you as a couple to go from one level to another level of understanding. But if, for example, there is a new party involved, it has reached a level where, for example, this particular great lady here asks even to be taken over by another person. Let me call, so this is J, this is, for example, N. Let me, in this case here, bring another person here called 𝐂𝐸. If in this case here, this person, instead of bringing me her parents and my parents working and, of course, siblings working together, there is another party here called 𝐂𝐸. So in this case here, 𝐂𝐸 is really working so hard to take over. If there is a new outfit involved, that we are going to have our assets in this case here being transferred in this case here to a new entity, a new person here, then automatically this becomes what here? An external reconstruction. It's an external reconstruction. So on the external reconstruction, there must be a new entity. There must be a new outfit that will be able to take over the operations of this struggling organization, of this struggling marriage. Now, please listen and listen to me. From the way we have read this question, the way it has been introduced here, is it going to be an internal reconstruction or an external reconstruction? The way it has been explained here, is it going to be an internal or external reconstruction? It's an external because there is a new body called, in this case, Zawadi, that is coming to buy the assets and, of course, everything from who? From this struggling firm known as Hasara Limited. Now, ladies and gentlemen, the very first thing you need to do whenever there are issues of this nature, even at family level, as she's going, of course, this great lady has really contributed to the assets of the family. So if it's an external undertaking, she's going away, then we will have to sit down and look at we have to sit down and look at our assets and our liabilities from the family angle, because for sure, hata kama mmekosana dakika ya mwisho, She contributed to this particular what year existence of whatever you have. So then, ladies and gentlemen, if it's an external reconstruction, the very first thing you need to do is to realize your assets and what your liabilities. So you have to draw what we call a realization account. If it's external reconstruction like this one, the very first thing you do is to develop what we call realization account. So please draw there for us a realization account. Realization account. Realization account. So you're drawing there for us. Why are we putting up a realization account? It's because we are realizing that this is an external reconstruction. And if it's an external reconstruction, ladies and gentlemen, the very first thing you need to do is to come and give us what we are calling a realization what here? A realization account. So in this realization account, you are going to close your assets because now things are no longer well. They're no longer good. We're going to close all our assets and liabilities here. So please come here and bring assets here because assets are supposed to be debited always. So assets, you bring both non-current and what here? Current assets. And then you bring liabilities here, of which liabilities, we only bring what here, somebody? A current liabilities. Current liabilities. So these are normally 3 marks and my light is too much. Just a minute, just 1 minute. It's not yet perfect, but I think it's much better now. I think it's much better now. What do you think? Not perfect, but much better. Yes. So ladies and gentlemen, please close. Now that things are closing up at the family level, things are closing up because this company called AFRA is really struggling. Let's look at the balance sheet of AFRA. The balance sheet of AFRA, let's bring in this case here the assets that it has. For assets, you bring non-current and current assets. Are you able to see the balance sheet of AFRA? Are you able to see the balance sheet of AFRA? Are you able to see the balance sheet of AFRA? Are you able to see the balance sheet of AFRA? So if you look at AFRA Limited, these guys have given us some balance sheet there. So it is those assets that we would want to sit down and discuss about. Those assets, the way we have been carrying them. So at book value. The first one that I'm seeing there is called property, plant, and equipment. So we have property, plant, and equipment. I'm bringing this from AFRA Limited. So we have 10,957. 10,957 point what year? 0.4. Then we have another asset called who? Available for sale. Available for sale. Available for sale, we have 647. 647. Then, ladies and gentlemen, we have another asset called goodwill. Now, ladies and gentlemen, honestly, if we are being taken down because of liquidation, because of bankruptcy, do you still think that we have an asset called goodwill anymore? Do we have an asset called goodwill? No goodwill. Because actually what we should be talking about by the time my wife is running out of my life, it means that I have bad will. So any, ladies and gentlemen, intangible asset that you have there, could it be called a brand name? That you are no longer a brand. If your wife in this case is running away from you, are you a brand? Are you a brand? No. So any intangible asset called a brand, called goodwill, or research and development, those will no longer be assets. They shall be left out. They shall be left out. So from there, we go to the next asset. The next asset, ladies and gentlemen, that we have here is called preliminary expenses. What do you know about preliminary expenses? Those expenses that we incur at the very beginning, of course, they belong to research and what development. So that again is an intangible asset. So that one will be left out. That will be left out. That will be left out. Good questions over there. Good questions over there. We shall be able to discuss that, Mackenzie. First of all, let's recognize everything in this case here at what here at book values, because the market values, of course, you'll realize these will be the takeover values. So we are recognizing this at book values. We are closing books of ASARA. We are closing books of ASARA, but we shall be able to see that. All right. So we are reading in this case here from there. I can see. So from there, I can see current assets. So current assets, I'm able to see inventory. So inventory. So the book value of inventory is what here? The book value of inventory is 872. 872 point what here? 872.5. Then, ladies and gentlemen, we have in this case here fair financial assets at fair value. So we simply call them FA. So FA, what do we have there? We have we have receivable first of all. I'm skipping receivables. So receivables, what I can see there, we have 689, point what here, 0.9. And then lastly, ladies and gentlemen, we have here financial assets at fair value. So financial assets at fair value, we have here 216.4. So up to here, ladies and gentlemen, are we together really? I've been able to realize my assets. All right. Then go to the liabilities. Liabilities, what are we picking here? It's only the current liabilities that we are taking to our realization account. I'll be able to explain something to do with these non-current liabilities. So when you go to the liabilities, equity and liabilities of ASARA, I can see ordinary share capital, I did not pick that. 7% cumulative, I'll not pick that. Revenue, I'll not pick that. Revenue reserves, I'll not pick that. But now I can see liabilities, of which I can see 10% debentures, so those are non-current. From there, I can see current liabilities. I'm able to see the bank overdraft. So we have here bank OD. Bank OD, that is a current liability of 775.8. 775.8. From there, ladies and gentlemen, we have, I think I'm wasting my space a lot. So we have here bank overdraft. So bank overdraft, we have here 775.8. 775.8. After that, ladies and gentlemen, we have accounts payable. We have the payable. So the payable, what do we have there? The payable, ladies and gentlemen, the payable that I can see there very fast is 1962, the year that I was born. And then, ladies and gentlemen, we have in this case here what they're calling tax, income tax. So income tax, what do we have here? Income tax, what we have here under income tax is 275.1. 275.1. So let me know whether, guys, we are together up to here. Oh, yeah. Well, let me know whether we are together up to here. Let me know whether we are together up to here. All right. All right. Now, ladies and gentlemen, please listen. We've been able to recognize what here? Our assets here. Our assets here. Let's continue. And these are very special accounts to me. Very special, very dear. Because in number one, Roman 1 of this question, what have they told us to do? Roman 1 of this question, they have told us Roman 1 of this question, they want us to give them the relevant ledger accounts to close in the books of ASARA Limited. And of course, because it's an external reconstruction, realization account is the major account. Now from there, ladies and gentlemen, what I will do, I have very fast, please listen, I have in this case here, members of the company, owners of the company. Owners of the company, we normally have them in the capital structure. Remember, owners of the company, these are those guys, in this case here, who are in the capital structure. These are the owners, capital structure, in the capital structure. So in the capital structure, those guys that I teach financial management, in the capital structure, we have ordinary share capital, isn't it? Ordinary shareholders, all right? Then we have, in this case here, debt, debenture holders. Debenture holders. Then, ladies and gentlemen, in this case here, we have who? We have, of course, preference shareholders. Preference shareholders. Please write this somewhere. These are the owners. These are the owners. So these owners here, we don't bring them here under liabilities and equity, of course. We don't bring them here directly. No, remember them, they have some residual interest here. As we close the company, these guys are going to be paid something small as they walk away. As they walk away. So, ladies and gentlemen, I would want us to do their accounts separately. These are the owners. We must compensate them for them to go away. They cannot just go away like that. All right. Of course, like current liabilities, these guys must be paid to the last cent. But these are the guys here who are the real owners of the company, giving us debt, giving us the major finances that we need. Then we need to do their accounts individually. We need to do the accounts individually. And I would want us, ladies and gentlemen, very fast in this case here, we start with a 7% preference sundry. 7% preference sundry. So we start with the preference shareholders. Let's do the account. Let's do the account. 7% preference sundry. 7% preference sundry. Why are we calling them sundry? Why are we calling them sundry? Somebody told me that we are calling them sundry because these guys, of course, being the owners of this company, they have messed up. They've messed up. That is why the company is in financial difficulties. They no longer want to support it. All right. So somebody told me that because now these are, we are going to have two types of preference shareholders. We have preference shareholders for the old company, which is dying, and we have preference shareholders for the new company. To differentiate them, the shareholders or the preference shareholders of the old dying company, we call them sundry. Sundry. Somebody told me, Mwalimu, to even make it better, call them sun-dry. That they are going drying outside there, sun drying outside there. They are going, in this case, burning outside there. So 7% preference sundry. Please put this as a T account. Put this as a T account. So the very first thing you do from the books of Hasara, the old company, I would want to know the balance of this preference share capital. Preference share capital. Are you able to see their balance? Are you able to see their balance? Motabori tells me 4,000. Go to the books of Hasara. Go to the books of Hasara Limited. You'll be able to see preference share capital. Preference share capital under equity. Preference share capital 4,000. So in this case here, balance brought down 4,000. And then now, ladies and gentlemen, we see how we are going to pay these guys because they can't go without fighting. Remember, they are going outside there under the sun, leaving away their assets behind. All right, so you must pay them. And in this case here, the scheme will have to tell you, like, how are these guys being paid? And they're normally paid in a very easy way. They are nice people. They'll be paid in a very easy way. Go to note number 1. Go to note number 1. Zawadi Limited issued 3 new ordinary shares of shillings 10 each for every 7% cumulative preference shares in Hasara. So in this case here, remember, it is new over old. So they were given 3. So they were given ordinary share capital. These guys were given ordinary share capital. In what ratio? It is 3 new for every 5. 3 new for every 5 preference shares that they have. 3 new, read again. It is 3 new ordinary shares of shillings 10 each for every 7% cumulative preference shares that they have. So it is 3 new for every 5 shares. For every 5 shares. So they have to know how many preference shares do they have. How many preference shares, not share capital in terms of money. How many preference shares? So when you talk of number of shares, we normally take the share capital divided by par value. Share capital divided by par value. So remember, the share capital, ladies and gentlemen, in this case is 4,000. This is in shillings, 4,000. But have they given me the share par value? The par value of this, please go to the balance sheet of Hasara. Go to the balance sheet of Hasara. Tell me, in this case here, from the balance sheet of Hasara, in bracket, they'll always give you this par value in brackets. What is the par value of the preference shares there? What is the par value of the preference shares there? They're telling me it is 10. So you have to divide this by 10 because you see these are shares. So this must also be shares. So in short, now you are getting to know how many ordinary shares they will give out. How many ordinary shares they will give out. So then you have to change now this number of shares to money by multiplying this with the market price per share over each share issued. So these guys, we gave them ordinary shares at what market price per share? At what market price per share? Read note number 1. Read note number 1. Note number 1, Zawadi Limited issued 3 new ordinary shares of shillings 10 each for every 7% cumulative preference shares in Hasara. So it issued 3 new ordinary shares of shillings 10 each. We are lucky. We are lucky because, again, we are finding a situation where each of our share is worth shillings 10. Each of our share is worth shillings 10. So is there somebody who is able to give me these ordinary shares that we gave these guys? They are worth how much? So somebody is giving me a figure of what here? Somebody, a figure of 2,400. Somebody is giving me a figure of 2,400. So that is the first zawadi we gave these guys. That is the first zawadi we gave these guys. Remember, the company taking over is not a zawadi. It's going to give these guys zawadis to reduce, in this case, their liability. Their liability. Now, ladies and gentlemen, please listen. Please continue reading there. In addition, we have the 7% cumulative preference shareholders in Hasara Limited were issued with two new, please read there, read that sentence. Note number one, second sentence. In addition, the 7% cumulative preference shareholders in Hasara Limited were issued with two new 10% preference shares of shillings 10 per value in Zawadi Limited for every, again, 7% cumulative preference shares held. Let's read this again. In addition, these guys were very lucky. They were getting so many Zawadis. In addition, the 7% cumulative preference shares in Hasara Limited were issued with the two new, and they were given another gift. It's called the 10% preference shares. 10% preference shares. 10% preference shares. 10% preference shares. What is the ratio? They got this in the ratio of 2 to what? Here, somebody. They got this in the ratio of 2. If you read sentence number 2, note number 1. In addition, the 7% cumulative preference shareholders in Hasara Limited were issued with the two new 10% preference shares of shillings 10. Remember, the market value there is shillings 10. Shillings 10. Par value is awarded for every 5. For every 5. So 2 over 5. 2 over 5 shares times, in this case here, 4,000, again divided by 10 to make this number of shares. And they're telling us that whatever they gave is still worth 10 bob. Is there somebody who is able to give me the value? Is there somebody who is able to give me this value? They're giving me a value of 1,600. They're giving me a value of, once you understand this language, I normally tell my students this language is like a tongue twister. And once you know how to really use this tongue twister and, of course, say those great names, great words, then you are good to go. If can tie, and untie a tie. Why can tie, and untie a tie? As can tie, and untie a tie. So it's a tongue twister. The minute you understand that it is 2 new shares over, you'll never go wrong. You'll never go wrong. We go to note number 2. They're telling me this is 1,600. We go to note number 2. 1,600. We go to note number 2. So note number 2, what are they telling me, these great friends of mine? Note number 2, they are telling me that the preference dividends in Hasara Limited were 3 years in arrears. 3 years in arrears. So we have preference dividends that these guys are getting. How much are they supposed to be getting as preference shares per year? Preference dividends, I mean. Preference dividends, these guys, how much are they supposed to be getting per year? Remember, it is a couponated rate of 7%. And their total money is 4,000. Their total money is 4,000. So every year they should be getting 7% of 4,000. But remember, we haven't paid them for how many years? We haven't paid them for 3 years. We haven't paid them for 3 years. We haven't paid them for 3 years. So are you able to tell me the total amount that we owe them? Are you able to give me the total amount that we owe these guys? Are you able to give me the total amount that we owe these guys? So they're telling me it's 840, isn't it? So remember, first of all, before even thinking of how we're going to compensate them, it's a liability that we have for them. It is the money we owe them. So in this case here, we have to accrue this money here. So in this case, ladies and gentlemen, we have preference dividends in arrears. Preference dividends in arrears. So we have here preference dividends in arrears of 840. And remember, because now this money has to be paid immediately, automatically here, ladies and gentlemen, this preference dividend that you've been able to book here, you've been able to take it here. All right, or we'll come back to that. Let's first of all continue reading this, that we have their dividends, that we have not been paying them. We have not been paying them this amount. We have not been paying them this amount. Look at this note number 2. Look at note number 2. The preference dividends in Hasara Limited were 3 years in arrears. The 7% cumulative preference shareholders in 𝐸 Limited will accept 3 fully paid ordinary shares of 10 each in 𝐸 Limited and the shillings 20 of 8% debentures. Let's read this very well. I have even to share this question for you to see exactly what we are talking about. Mackenzie, the 2400? Is it 1600? Is it 2400 really? Is it 2400? I don't know. Is it 2400? I can't see the 2400 here. Let me just share this. We studied together. Let me share this so that we can study it together for us to even get better understanding. All right. Before I go to this guy's question, so we have, ladies and gentlemen, the paper here. This is the paper. So this paper here, allow me to, first of all, increase even the font size. So note number 2. We are reading note number 2 before I go back to what this gentleman is asking. Note number 2. There is a concept, if you happen to understand this, you'll end up getting so many marks without knowing what you are doing. And really, that's what you want. We want you to pass in the easiest possible way. We are told here, note 2, the preference dividends in 𝐸 Limited were 3 years in arrears. So remember that these guys, we are paying them 7% per annum. So 7% of 4,000, we've been able to get 280, which is per annum. But now remember, we haven't paid them for 3 years. So we took that 280 times 3 to get the 840. So once we got that 840, we must recognize that as a liability on our side. Liabilities we credit, of course. We credit them. All right. Now, ladies and gentlemen, please listen to me very well here. Look at this. The 7% cumulative preference shareholders in 𝐸 Limited will accept 3 fully paid ordinary shares of shillings 10 each in 𝐸 Limited and the shillings 20 of 8% debentures in 𝐸 Limited for every shillings 100 of the preference dividend in arrears. We're going to pay them in 2 ways. For the 840, to cover the 840, we are going to pay them in 2 ways. They shall accept ordinary shares and we're going to give them debentures. 2 ways. They shall accept ordinary shares and we're going to give them debentures. So in this case here, they shall accept ordinary shares. And we are going as well to give them what here? Debentures. They are going to accept those 2. The 8 for the 840. They're going to accept those 2. And now what is the ratio really? Because it's about now the ratio. What is the ratio here? So what they have told us here, if you look at this note number 2, they've told us the 7% cumulative preference shareholders in 𝐸 Limited will accept 3 fully paid ordinary shares of shillings 10. So here, ordinary shares, they're going to accept what here? 3. Ordinary shares are going to accept 3 shares here. They're going to accept 3 shares there. And then you continue. How about debentures? What are they accepting for debentures? For debentures, ladies and gentlemen, so 3 fully paid ordinary shares of shillings 10 each in 𝐸 Limited and the shillings 20 of 8% debentures. So for these 8% debentures, these guys here, they are accepting shillings 20. Now listen to me very well. Look at how they are giving us a denominator for the 2 of them. They are telling us here, 3 fully paid ordinary shares of shillings 10 each in 𝐸 Limited and shillings 20 of 8% debentures in 𝐸 Limited for every shillings 100 of the preference dividends in arrears. For each shillings 100. So these 3 will be for shillings 100. This will as well be for shillings 100, like that. So 3 for every shillings 100 and shillings 20 for every shillings what here? For every shillings 100. So we start with the ordinary share capital. So I will take in this case here 3 for every shillings 100, and these guys, we owe them for the preference dividends, we owe them shillings 840. So you see the shillings and shillings here will cancel out, leaving me with the number of shares we're going to give them. So meaning that at the end of the day, we must monetize these. We must come and multiply this with 10. So can you kindly, first of all, give me this value? Kindly give me this value for the ordinary shares. Give me this value for the ordinary shares. Win is giving me 25.2. Win is giving me 25.2. 25.2 for the ordinary shares. For the ordinary shares. So ordinary shares, because of the size of my board, please write there 25.2. 25.2. How about debentures? Is there any ninja that can work out debentures correctly? Is there any ninja that can work out debentures correctly? Any ninja who can work out debentures correctly, the amount of debentures? Remember, for debentures, we're going to give them shillings 20 worth of debentures for every shillings 100 of a preference share dividend that we owe them. They're giving me a figure of 168, and then they are correct. They're giving me a figure of 168, and in this case here, they happen to be what here? They happen to be correct. 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 168. So you see, it is shillings 20 of debentures for shillings 100 of the shillings 840 of the shillings 840. Shillings 840 of the shillings 840. Shillings 840, like that. So times. So this is what they are doing to get 100 what here, 68. Remember here, shillings and shillings will cancel out, leaving with these shillings. Whenever you have shillings, I have to write them in shillings. If you've noted, here, for example, it was 5 shares. So if it is shillings, you have to write shillings to see how it will look like. Like now, these shillings and shillings will cancel out. So I know I'll need market price. Here, it is shillings 20 for every shillings 100. So when I multiply this with shillings and shillings, I don't need any market price per share. So that's how they got the 100 what here, the 168. That's how they got the 168. So ladies and gentlemen, are you able to come and give us what here? Are you able to come and give us the balancing figure? The balancing figure. Oh, it is 252, not 25.2. I'm being told it is 252. Please check out. Check out. I'm so sure most of those guys who are getting 25.2 did not multiply with that 10. Never multiplied with that 10. Never multiplied with that 10. So is there someone who is able to give me, in this case here, how much am I going to take to the realization account here? The difference. The difference. So according to Alango, it's supposed to be 420, right? It's supposed to be 420. So in this case, in terms of preference, remember we have 4840. 4840 is the biggest amount. 4840 is the biggest amount here. When you balance this, 4840 comes there. We have 4840 here. So in this case here, the balancing figure will be on this side. The balancing figure will be on this side. The balancing figure will be on this side. The smaller figure now will be on this side. So you write there to realization account. To realization account. And because you have said to realization, then we need to come and credit this account. We credit this account. So in this case here, from preference sundry. From preference sundry, you guys are giving me 420. You guys are giving me 420. And then, ladies and gentlemen, there are things you're supposed to be knowing by now. There are things we should be knowing by now. In this realization, there are key things. There are key things that we need to appreciate. If, for example, we have any liquidation expenses, and these liquidation expenses were paid for by the new entity, So the new entity in this case, he has paid for these liquidation expenses, then automatically that is a liability on our side. But given in this case that these are liabilities which are coming are fresh, they never existed. They never existed. They are not given in the balance sheet. They are not given in the balance sheet. These are given the additional notes to the accounts. Then we will do the opposite. We normally bring them here on the debit side. So if we have liquidation, please listen, like in this case here, we'll be having liquidation, and this liquidation were paid for by who? By the new entity, So it's a new liability which we never had. It has to be recorded here. At the same time, we have this preference dividend. You know, it is not in the balance sheet of ASARA. So it's something that is coming new. When these guys come to the table to discuss with me, they tell me, you know what? These guys have never paid us preference dividends. Oh, okay. So it never existed there. So then I'll have to do this abracadabra and bring this preference dividend here. So we have in this case here preference dividend in arrears. Just put it here. Preference dividend in arrears of 840. Put it there. I'll be able to explain even better. I'll be able to explain 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 better. Preference dividends, I'll be able to explain better. So for now, what you're supposed to do, you see like now preference dividend is a new liability. You credit here and debit it to the realization account. Liquidation expenses, if you have them, that's a new liability, which is not existing in the books of accounts of ASARA Limited. You must come and realize it here. Put it here. All right. The board is not very clear. It's because of the size of the accounts you are doing, but we shall overcome. We shall overcome. It means if I want to make it very clear, I have to reduce the size of the board. What we could guys do here, occasionally, if you are very good in writing, please be taking snapshots of your write-up, and then you throw that to the group. You throw that to the group. All right. All right. So now we are through with the 7% preference sundry. Who else do we have? Do we have any other sundry member? Any other sundry member will be chased away. Yes. Remember I told you from the word ago that the sundry members are the members who are in the capital structure. So we have the preference sundry. We have the ordinary share capital sundry. So let's look for the ordinary share capital sundry. Let's look for the ordinary share capital sundry. Once you understand this, now you've understood everything. Ordinary share capital sundry. Ordinary share capital sundry. So I'm giving you 3 minutes. You try reconstructing this for us. Ordinary share capital sundry. Sundry. Ordinary share capital sundry. I'm giving you 3 minutes. The debentures already. We shall do it after this now. Ordinary share capital sundry. And then we do the debentures. Thank you very much. We do the debentures. So I'm giving you 2 minutes. You try ordinary share capital sundry. Abracadabra. Thank you. The 2 minutes are over. This is what I will do. This is what I'll do for ordinary share capital sundry. So first of all, bring the balance brought down. Give us the balance brought down. Are you able to see that figure from ASARA's account? From ASARA's account, are you able to see it? It is 6,000. It is 6,000. Thank you very much. Now, ladies and gentlemen, from there now work it through to see how we compensated them. How do we compensate these fellas? How do we compensate these fellas? How do we compensate these fellas? Note number 2, already these first 2 are for the preference sundry. Look at note number 3. Note number 3, the existing 10% debentures, no, that's not theirs. Look at note number 4. The ordinary shareholders in ASARA Limited were issued with 2 new ordinary shares of shillings 10 each in Zawadi Limited for every 5 ordinary shares held. For every 5 shares held. So in this case here, we gave them ordinary share capital. So ladies and gentlemen, I want to see how you're going to compensate these guys. Let's compensate them. Let's compensate them. Let's compensate them. These guys here are called ordinary shareholders. We are compensating them from note number 4. From note number 4, wamesema 2 new shares for every 5. It is here. Wamesema hapa. The ordinary shareholders in ASARA Limited were issued with 2 new ordinary shares of shillings 10 each. It is Zawadi Limited for every 5 ordinary shares held. So nitakuja hapa straight away abracadabra niseme it is too new for every 5 held. And how many were they holding? It is 6,000. This is money. I need to convert this to shares, just like here, to shares. So to convert this to shares, I need to divide this with the par value. So is there somebody who is able to see the par value of the ordinary share capital of ASARA? Kwa vitabu zake, into bracket wamesema par value ngapi? Par value ngapi? Kwa vitabu zake. Kwa vitabu zake. Wamesema ni 10. Thank you very much. Wamesema ni 10. So once I get this, then this will be, ladies and gentlemen, in this question, I can see there is a number of shares being issued at a particular price. And the particular price, you guys have given me a value of what there? A value of 10. Fortunately, we have 10, 10, 10, 10, 10. In most cases, they'll tell you a par value is different from the market value. So is there somebody who is able to give me this ordinary share capital? Is there somebody who is able to give me this ordinary share capital? Inakuja ngapi? Nataka niwasaidie sana. Inakuja ngapi? Wanasema 2400, isn't it? Wanasema this is 2400. This is 2400. This is 2400. This is 2400. 2400. Now, ladies and gentlemen, remember very fast, this is the only compensation that these guys are going to get from the liquidator. So the liquidator will be giving this as compensation alone. But we know that these guys are going to take other liabilities. We know that they are the ones actually who have messed up this company, the owners. We know that they are the ones who have been enjoying goodwill for a very long time. Now that the goodwill is no longer there because the company is collapsing, you go through the balance sheet. Go through the balance sheet, ladies and gentlemen, recognizing things that they need now to absorb. Go through the balance sheet. We have to give them all those assets which are valueless now. So, for example, there is goodwill. Goodwill over how much? That they want to absorb this. Goodwill over how much? Goodwill over how much? Do we have any other intangible asset that now you think is worthless? We give them? Do we have any intangible asset, any other intangible asset that you think it's preliminary expenses? Yes, we have preliminary. Give it to them. Let them take it away because it's useless. Preliminary expenses. Over how much? Over how much? Take them away. Over how much? Of 87.8, isn't it? Of 87.8. Of 87.8. Of 87. Just look at the reserves. Look at the reserves given in the question. Look at the reserves given in the question. Look at the reserves given in the question. Ordinary share capital. If you look at the ordinary share capital, ladies and gentlemen, you'll be able to see here. You see equity and liabilities. We have ordinary share capital. We have been able to acknowledge this. We have 7% cumulative preference. This we can't give it to them. But you can see we have any reserve normally belongs to ordinary shareholders. We have revaluation reserves, credit 400.8. Revaluation reserve 400.8. So we have here revaluation reserve, revaluation reserve 400.8. It's credit. It's positive. But again, when you look down there, there are losses, ladies and gentlemen. When you look down there, there are losses, ladies and gentlemen. We have here a revenue reserve, which is another name for retained earnings. But it happens to be negative. It's a loss. So any losses here, of course, they have to drink this. It is their soup. Why were they running a company? In this case, you're making what here? Making losses. Let them drink this. So we have, in this case, here, accumulated losses. In terms of revenue reserve, it's negative. How much? How much do we give them? Are you able to see that figure? Are you able to see that figure? How much do we give these guys? How much do we give these guys? How much do we give these guys? How much? Are you able to see that figure? Guys, talk to me, talk to me. Talk to me, talk to me. 3822.7, isn't it? 3822.7. 3822.7. 3822.7. 3822.7. So then, ladies and gentlemen, are you able to balance this thing? Are you able to balance it? Are you able to balance this thing? Which side is heavier? Which side is heavier? Which side is heavier? I think the left side with 6430.5. 64. This left side with 6430.5. 6430.5. So then this has to be 6430.5 as well. So in this case here, to realization, the smaller part here, the difference will come here to realization account. How much? How much are we taking to realization? How much? 29 point what here? 29 29.7. So to realization, we are taking 29.7, 29.7. So we are crediting here. We are crediting here, so we should be able to debit this side. We should be able to debit this side. So come here, tell us from ordinary sundry. From ordinary share capital sundry. Sundry. So you're getting 29 point what here, somebody? 29.7, like that. 29.7. Sante Esther, if it was a profit, you would have, in this case, if it was a profit if it was a profit, just like you've done with this revenue reserve, evaluation reserve, you would have given it to them. You would have given it to them. But you know, if a company is struggling, will it be having any profit? I've never seen any reconstruction question where a company has a profit. All of them will be having what here? Losses. Thanks for asking the question. All of them will be having losses like that. So up to there, ladies and gentlemen, are we together? Are we together? Try to write this very well. I can see the light is disturbing me, but we shall overcome. We shall overcome. We shall overcome. There's somebody saying they think in this case we should question, we should credit with 2400. We shall be able to get those things. We shall be able to get them. Let's just continue. After all, there is no perfection in this. Remember, this is a question that is normally set to waste your time. To waste your time. It can really waste your time if you're not very careful. So the most important thing is to get as many correct entries as possible, and then you move on. All right. So do we have any other sundry member? 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 We've been able to handle. Leonida, we cannot go. Leonida, you guys have not understood this really. We cannot, so long as you pick most of the things nicely, you'll be able to get all the marks. If we go back again to explaining like what happened here, we'll not be able to make progress. This is something that I've marked for so long. What we do, let's just progress. Or do you want me to stay here, I mean, for perfection? Or do you want us to perfect? Let's discuss this. Let's discuss this. We'd want us to like produce everything perfect. Would you want everything to be perfect? No. Tuendelee. So we go straight away, ladies and gentlemen, to debentures sundry account. Debenture sundry account. Debentures sundry account. So then go ahead and give me, because it's a liability, give me the balance brought down. Give me balance brought down. Are you able to see the balance brought down? Are you able to see the balance brought down? Are you able to see the balance brought down? Balance brought down for the debentures, it's 4,000. 4,000. Debentures from Hasara, 4,000. Debentures from Hasara, 4,000. So how are these guys in this case here paid back? How are they paid back? Let's read here. Let's read and see how these guys were paid back. So go straight away to note number. Go straight away. Do we know this note? We'll be able to see the note. There is a note talking about what here, how these guys were paid back. It's here. Note number 3. The existing 10% debenture holders in Hasara Limited were issued with 5 fully paid ordinary shares of shillings 10 each in Zawadi Limited and shillings 40 of shillings 8% debentures for shillings 100 of 10% debentures. No worries, I'll be able to get every mark here. The existing 10%, these guys are 10% debentures. Were issued with 5 fully paid ordinary shares. And again, they were given some 8% debentures. So we paid them with 2 financial instruments. We gave them ordinary shares, and then we gave them 8% debentures. 8% debentures. So remember, there are 10% debentures like that. So we gave them ordinary shares, and we gave them 8% debentures. That's how we paid these guys. So what are the fractions? How do these ratios look like? These are how they look like. Look at the question. These are how they look like. These are how they look like. This is how they look like. If you look at note number 3, the existing 10% debenture holders in Hasara Limited were issued with 5 fully paid ordinary shares. So they were given 5 shares here, all right? Ordinary shares were 5 of shillings 10 each in Zawadi Limited, and they were given a 48% debenture. They were given a shillings 48% debenture. They were given a shillings 48% debenture. For what? You know, there must be something in exchange. For every shillings 100 of debentures they had. For every, so in this case here, we are told here, the existing 10% debenture holders in Hasara Limited were issued with 5 fully and the shillings 40 of 8% debentures for every 100. It means that each of this, we have a base of 100. Each of this, we have a base of 100. Shillings 100. All right. So remember, these are shares. So in this case here, times what we owed them. These guys, we owed them shillings 4,000. So times shillings 4,000 here. Times shillings 4,000. In this case here, times shillings 4,000 here. 4,000. So in this case, I cannot come and divide this by 10 to get power, because there is an agreement here, shillings and shillings. And because I know that these shillings and shillings will go, then whatever I'm left with, or rather, even for the ordinary share capital that we gave them, they have given us a market price. That's another indicator. They have given us a market price for each of those shares. Are you able to see the issue price of those shares? Are you able to see the issue price of those shares? In this question, we were very lucky because they told us it is shillings 10. Shillings 10 throughout. Shillings 10 throughout. Shillings 10 throughout. They told us shillings 10 throughout. We were very lucky here. So times 10 here. So then could you kindly give me this answer? Kindly give me this answer. Kindly give me this answer. Are you able to give me this answer pretty fast? Are you able to give me this answer pretty fast? Somebody is getting 2,000. Somebody is getting 2,000. Somebody is getting 2,000 here. Somebody is getting 2,000 here. How about this one here? You see this one? Look at this. Shillings will cancel out. The final answer will be in shillings. After all, they have not even told you that the debenture notes were worth shillings 10. Hakuna kitu kama hiyo. You, whatever answer I will get here automatically will be in shillings. So who is able to give me this answer very fast? Shillings 1,600. Shillings 1,600, like that. Here there is no match really, nothing much like giving debentures. There is no place they have told us that we were owing them interest in arrears, nothing. So here, go ahead and balance. So I can see, ladies and gentlemen, straight away that we have here 4,000. We have here 4,000 is higher. So the balance is what will go to the realization account. Over how much? Realization account over how much? 400. So here it's debit. Here it's debit. On this side, here it will be credit. On this side, it will be credit. So in this case here, we have here from sundry, from debentures. From debentures, sundry. Debentures, sundry. Over how much here, somebody? Of 400. Debenture sundry of 400. Like that. Debenture sundry of 400. So up to there, somehow, are we together somehow? It will not be 100% really because of the speed, but somehow. Today, I want us to agree like up to 60% because I'm so sure this is a question. If you try perfection, you'll lose more than 2 hours and you'll fail. I want you to master this thing in a way that within, say, 40 minutes, you'll have covered 70% of the marks and then you pass. And then you go to another question. You go to another question. Now, ladies and gentlemen, look at this question. Look at this question. Look at this question. I want us to go straight away to this one where they are talking about the liquidation expenses of Hasara Limited amounted to 30,000 and were paid by who? Were paid by the new company. So these liquidation expenses were paid by the new company. They were paid by the new company. You and I, ladies and gentlemen, appreciate the fact that whenever, for example, you are being auctioned, if you have a facility given to you by a bank, and then by bad luck, you're auctioned, who normally incurs auctioneer's fees? Is it the person being auctioned or the bank? Who is supposed to incur the auctioneer's fees? Who is supposed to incur the auctioneer's fee? If the bank pays for you, automatically it will be your liability. When they're going to look at what has been realized out of the auction, that money will be subtracted. So anytime you hear of liquidation expenses, always, if they are paid by the new entity, they shall be debited here. So liquidation expenses, remember our figures are in thousands. Liquidation expenses, please put 30 there. Put 30 like that. If, for example, we paid this liquidation ourselves, then we don't put it. We don't put it anywhere here. It just disappears like that. The person auctioned. They're saying the network is poor. The network is poor. They're saying the network is poor. Are you sure? Are you sure? My network is not that bad. My network is not that bad. My network is very, very okay. Is very okay. All right. So, ladies and gentlemen, from there now, the next thing that I would wish we get to calculate is what we call the purchase consideration, which is the last item in this account. So right here, purchase who? Purchase consideration, the last item. So we need a working for this purchase consideration. We need a working for this. It's the last item. Normally goes on the credit side. Purchase consideration. Now, purchase consideration is the easiest. I would want us to work this purchase consideration out ourselves very fast. Very fast. Purchase consideration normally is the easiest account to do. Is the easiest account to do. So this purchase consideration, unaangalia zawadi ambazo zilipeanwa. So you will simply come and give us all those presents given by Zawadi. So Zawadi Limited. So this Zawadi Limited, we have in this case here Zawadi Limited. Zawadi Limited, for example, paid the sundry members ordinary shares. It paid ordinary shares. It paid in terms of preference shares. It paid in terms of what here? It paid in terms of debentures. Debentures. It gave debentures out. So I would want us to go to the ordinary members account. I would want us to identify the ordinary shares that these guys were given out. Let's go to those sundry members. Sundry members, ordinary shares. Where you see ordinary shares, we add ordinary shares. I want us to see how much of ordinary shares we gave them. So when I look at my account, in this case here under ordinary share capital, not ordinary share capital, but under preference, we started with preference sundry. We started with preference sundry. Under preference sundry, I can see I've got ordinary shares of how much? Preference sundry, I can see ordinary shares of 2,400. Oh, yeah, they're not able to see this. Under preference sundry, still down there, I can see ordinary shares of 252. 252. Under preference sundry, under preference sundry, preference sundry, under preference sundry, 252. All right. Do we still have any other thing there? No, nothing. Go to the other sundry members account. The other sundry members, I can see ordinary share capital account. Under ordinary share capital account, these guys, we gave them something. We gave them something in return of their capital. We gave them ordinary share capital. We gave them ordinary share capital. We gave them 2,400 worth of shares. Share capital, ordinary share capital. So we don't have any other ordinary share capital here. So we go to the debenture sundry. Debenture sundry, we also gave them some ordinary share capital. Debenture sundry, we gave them ordinary share capital worth how much here? Somebody worth 2,000. So is there somebody who is able to give me how much in terms of ordinary share capital do we give these guys in total? How much in terms of ordinary share capital do we give these guys in total? 7052. So in this case here, we gave these guys 7052. We gave these guys 7052. We gave these guys 7052. In terms of ordinary shares. Again, we gave another zawadi to the sundry members who are going away. We gave some of them preference shares. So please go to each sundry members account and then you identify the preference shares which are in their accounts. And then we count all of them. We count all of them. Let's see here. We start with the preference sundry. So preference sundry, are you able to see any preference share capital? Let's read there. Preference sundry. What are you able to see there? Preference sundry. Preference sundry. Preference sundry. Okay, preference sundry. Preference sundry. Just go to the preference sundry here. Do we have some preference share capital? Oh, yes, we have 1,600 there. Go to the other sundry members account. We have in this case here ordinary share capital sundry members. When I'm in ordinary share capital sundry members, I'm looking for preference. Do we give them any preference shares, those guys? The ordinary share capital sundry, do we give them any preference share capital? Do we give them any preference share capital? No. But the debentures, we gave them preference sundry. Tuliwapatia matu kuwapatia. Debenture sundry. Debenture sundry. Tuliwapatia matu kuwapatia. We never gave them, isn't it? We never gave them. So basically, in terms of preference sundry, these guys, what do they have here? These guys, the only award we gave there is to one person, and we gave them value worth 1,600. 1,600. Let's go now slowly to the debentures. Fidelis will be able to understand this now from the debentures. Debentures. How much worth of debentures do we give out? So start with the first sundry members account. The first sundry members account is known as preference sundry. So on the preference sundry, I can see we gave there debentures of 168. We gave them 168. We gave these guys here debentures of 168. Go to another sundry members account. Another sundry members account, ladies and gentlemen, we have ordinary share capital sundry. Ordinary share capital sundry. Ama jamaa, tuliopatia kweli any debenture? Tuliopatia kweli any debenture, ordinary share capital debenture? No, no. But the debenture sundry, we happen to have given, in this case here, some debentures. We gave them 8% debentures, which in this case here gives us what figure, somebody here? Which gives us 1,600, isn't it? Which gives us 1,600. 1,600. Which in this case here then will end up giving us a what figure, ladies and gentlemen, here? Which will end up giving us a what figure here? They're not talking to me. 1768. And then you recall very fast that we paid liquidation expenses. We paid liquidation expenses on behalf of the old company or the going company. It's as we can take it as a zawadi we gave them. Of course, we shall recover them somewhere, but we shall take this as a zawadi we gave them. So liquidation expenses, ladies and gentlemen, what is the zawadi? I hope you guys are able to remember the 30. I hope you guys are able to remember the 30. And that is it. So please come and add the total there for you to give me the purchase consideration. Add the total there for you to give me the purchase consideration. Add the total there for you to give me the purchase what here? Purchase consideration. How much do we have as a purchase consideration? How much do we have the total for the four things? For the four things. So we have here 10,450. 10,450 is what you bring here. 10,450 is what you bring there. 10,450 is what you bring there. Have you done that? 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 And then, ladies and gentlemen, then if we are correct, this particular account should be able to balance and close up without any balance carried forward. But unless there is something we have left out, this account should be able to balance. This account, my figures are not very, very clear, but you should be able to use your figures. If you are correct, normally, the account should be able to balance off. The account should be able to balance off. If you are correct, normally, that account should be able to balance off. Is there somebody who has been able to confirm somehow that it is balancing both sides at what amount? Both sides at what amount? Both sides at what amount? Now they are not talking to me at all. Now they are not talking to me at all. $14,282.9. So 14,282.9. I will also write this other side like that. Even if it doesn't balance, so what? But I believe it should be able to. Is it balancing, somebody? Is it balancing, or there is a problem somewhere? It's balancing, right? Paul has confirmed it's balancing. All right, all right. Ladies and gentlemen, you know, I've tried to move with a lot of speed in this question. And you can see just doing part one alone has taken me more than an hour. Doing part one alone. That's how many marks? How many marks have I fetched by doing, part one of this question? Part one of this question, ladies and gentlemen, wanted me to do something very simple. let me teach you something, and I've seen these really messing up my students. They wanted us to do the relevant ledger accounts, T accounts, to close the books. 8 marks only. 8 marks only. Actually, whenever I get this kind of a question, trust you me, I'll not really take a lot of time on this thing, because I know, look at even the marking schemes I normally give you. All right. These guys would want you to be thorough. Please listen to me very well. There are things you should be able to be thorough with. Because basically closing the books is about what here the realization occur. So if I'm the one, I'll always come and realize these assets here. The ones that I'm able to realize very fast. And then the current liabilities that I'm able to do very fast. I'm so sure of this liquidation cost will be there that I can put there. And I'm so sure of this preference. This preference in arrears normally is there. Could even cram like that. Once you have done that, ladies and gentlemen, this thing of sundry, enda kauka huko mbali pia nayo. Wewe wachana nayo. You get your sundry. You can only come back to it later on if in this case here you happen to have finished the entire paper. If you happen to have finished the entire paper, that's when you'll be able to come back to the sundry. Yes, you shall miss some marks, but trust you me, there'll be so many marks that you'll be able to get in this case without even knowing what you're doing. Because like the examiner, how the examiner will mark this will be a mark, you'll be surprised. By doing these obvious things, you will be able to survive. You'll be able to survive. So can I go to the second part? Can I go to the second part? Oh, we take a screenshot. Winnie. Is it possible for somebody who is very good here to do Winnie, to do this baby girl a favor, to take a screenshot of their work that they have done, and then they send to the WhatsApp group? Is there somebody who is able to do that? Because I'm so sure this screen shot will not be very good. Oh, okay. With all the problems, let's move on. Thank you very much. All right. So then we go to part number 2. So part number 2, what do we have there? So for part number 2, ladies and gentlemen, they want us to do something very easy. Actually, if I'm the one, after I finish what I've shown you how to correct, rather not correct, but collect those low-hanging marks there in terms of the realization account, I'll straight away go to part 2. And the part 2, this is what I will do. Of course, I'll show you the procedure first of all, for you to follow the entire procedure, but I'll tell you what not to do and what to do. These are 6 marks that I should be able to get very fast. These are 6 marks. So journal entries to record the relevant transactions in the books of what year? Zawadi Limited. In the books of Zawadi Limited. So then how do we get to do this really? Very easy. Some marks, because I'll not be able to do this to the end, I'll be wrong. Like in the purchase consideration, I'll be wrong. But there will be very many things that I'll be able to get correctly pretty fast. I'll be able to get all those 6 marks without thinking, without even knowing what I'm doing. Those 6 marks, I'll get them. And even the one of balance sheet for the new company, I'll get all the marks without knowing what I'm doing. So, ladies and gentlemen, we start right away. We shall start right away with our journal entries. So now we are doing the journal entries. So Roman 2. The journal entries. So we have, of course, the first, so we have debit, we have credit. So remember, in this case, who is doing these journal entries? It has to be very clear on you. Read the question again. It has to be very clear on you. Let me show you how to get these free marks. Journal entries to record the relevant transactions in the books of what year? Zawadi. So it's Zawadi. You're the accountant of Zawadi. Now you are doing this. You're the accountant of Zawadi. Now you are doing this. So straight away, what will happen is that you shall get an invoice. You shall get an invoice from Hasara Limited, telling you want to purchase this. We have this contract. So now this is the invoice from the calculations. So once you get this invoice, remember now that will be a liability. So then what we're supposed to do in this case is to come and record business purchase account, open a business purchase account. And then of course we are crediting, in this case here, 𝐭𝐿𝐼𝐼 Limited. The name of the creditor here, 𝐭𝐿𝐼𝐼 Limited. We owe him. We owe this company. So are you able to remember the business purchase amount? We were able to do 𝐵ZAWADI Limited and we were able to get the purchase consideration. Was it 10,450? 10,450, yes. 10,450, 10,450 like that. This, of course, I'll not get it right. I'll not even bother with it in an exam. Or I can just write it for formality and then I put XXX for the examiner to go and do it. You need to know how to survive, you people. You're good ninjas. You should not fail. Good ninjas should be able to pass. God should bless you, good ninjas. Now, from there, in this case here, of course, this being the recording of what are the purchase consideration. And then we go ahead and pay. Now, the next step is to pay. So here we have recorded the invoice. So we go ahead and pay. So when we pay, ladies and gentlemen, what are we going to do when we pay? So when we pay, ladies and gentlemen, we are going to pay this straight away, the entire liability. So we're going to debit this. So we shall pay this, we debit this. So 𝐭𝐿𝐼𝐼 Limited. We debit this, 10,450. If, for example, we're paying this in form of cash, I would have created bank or cash. But remember here, you gave Zawadis. You gave, in this case here, like ordinary share capital. So you go to the Zawadis account. Do you remember that Zawadis account? It is the one that you bring here. Jimmy, I've caught you wrong-footed, Jimmy. Jimmy, we never pay. Jimmy, how can you say bank, Jimmy? We never paid this money. How do you pay these guys, these buggers, this money, and they have messed up their company? You gave out, in this case, your ordinary share capital. You gave out things there. So you go to Zawadi's account. If you remember that Zawadi's account. From Zawadi's account, in this case here, from Zawadi's account, what did we pay? We paid ordinary share capital. Ordinary share capital, we paid, in this case here, 70.52. I'm crediting. We paid, in this case, ladies and gentlemen, preference share capital. So preference share capital, in this case here, we paid 1,600. 1,600. We paid in form of debentures. Debentures we paid 1768. 1768, 1768. And then, of course, ladies and gentlemen, we did pay something small here. Liquidation 30. Liquidation 30, like that. Remember, you can't even say a bank because, you know, these are new companies. Zawadi is also a new company. Doesn't have any money. Actually, later on, you shall see that this is a bank overdraft. It's simply call it liquidation expenses. 30 like that. And then, of course, this is to recognize payment for the acquisition what year price. Remember, if it's a journal, you must write something there. Even if it's a abracadabra, you must write something there. You must write something there. You must write something there. So are we okay up to there, ladies and gentlemen? Are we okay somehow? Somehow. All right. Now, ladies and gentlemen, from there, now you do the journal entries for opening ledgers. Opening ledgers for the new company. So open ledgers, open asset ledgers. Mention there, open asset ledgers for the new company. So this is number one. Number two. Number three, open asset ledgers for the new company. Open asset ledgers for the new company. So we open asset ledgers for the new company. For the new company. For the new company. That's step number three. Step number three. Remember, it's still debit, credit. Debit, credit. So please, there is a note there which is giving you, so asset ledgers for the new company. So new company means that these assets, you shall take them at the market price, ama at the takeover price. Takeover price, not the book values zile zikuwa pale kwa hasara. Hapana. Na hii question wamekupatia the takeover prices. Wamekupatia the takeover prices. Wamekupatia the takeover prices. Wamekuambia the takeover prices hapa. Wamekuambia the takeover price. Kuna note imesema about takeover price. You simply recognize them. The assets of 𝐵ZAWADI Limited were taken over. Write note number 6 for your revision. You copy this down. This is normally a free mark. If I'm the one doing these journals in the new company, I'll start even with this thing. I will start with this thing, I can assure you. I'll get like 6 marks here. All the marks will come from here. This one plus the liabilities. I'll get all the marks from this. Because according to AFR, you don't have to get like all entries to get these 6 marks, trust you me. No, and I have normally shared with you the marking schemes. You can see always them, they're going and marking 1, 1, 1, 1, and then you see somebody even getting an award. All right. So in this case here, let's of course, assets shall be debited, isn't it? Assets shall be debited. Assets shall be debited. Assets shall be debited. So in this case here, we have PPE. I can see there PPE. Let me drop this sharing. You guys can see I'm copying everything from here. Take over prices. So let me stop sharing for you to see the board. So we have here PPE 9486 94. So this is debit, this credit. So these are assets. So we have here 94 86.8. 86.8. From there, the second asset given there in note number 6, it's available for sale. So available for sale is 810. 810. From there, ladies and gentlemen, we have in this case here inventory. What do we have there for inventory? In inventory, we have 608.7. 608.7. From there, ladies and gentlemen, we have in this case here financial assets. No, receivables first. Receivables first. So receivables, what do we have here for receivables? 477.1. 477.1. From there, ladies and gentlemen, we have what we are calling financial assets. Financial assets. So financial assets, what do we have here? 216.4. Financial assets, we have 216.4. Ladies and gentlemen, after that, we have nothing more. Nothing more. Please give me the total here. Give me the total here. Give me the total. Is there somebody who is able to give me the total there? Total 11,599. Total is 11,599. The whole of the 11,599 will go to the business purchase account. The whole of this will go to the business purchase account because that account has to be closed. And now we are creating here 11,599. Like that. 599. So is that okay? So of course the ledger narration will be like recording values of the new assets. Recording values, whichever language you give, so long as you've given something there. Even if it is in your mother tongue, you are okay. You are okay. But of course, don't use your mother tongue here. Don't use your mother tongue here. All right. So ladies and gentlemen, then if that is okay, if you allow me, I'll be able to go and open now ledger for liabilities. You open the ledgers, in this case here, for liabilities. So go ahead and open ledgers for liabilities, yes. Go ahead and open ledgers for liabilities. So now we are looking at the liabilities, debit, credit. This amount, I know you'll remember it. You'll remember that amount very well. I know you'll remember it. So now we are opening ledgers for liabilities. So we have in this case here debit, credit. So what have they told us about our liabilities? What have they told us about our liabilities? That should be entry 1. I can see what somebody, you scoop marks for free. This one here, you are scooping free marks. As other ninjas are looking on top there at the roof, you are getting marks there. 5, the current liabilities of AFRA Limited were taken over by Zawadi at the book value now. Book value given AFRA Limited. So simply go to AFRA Limited and pick those things. And the current liability, this bank overdraft, accounts payable, current income tax, you pick them the way they are. Pick them the way they are. And remember here now you are crediting them. You are crediting them. You are crediting them. So, of course, we shall have here business purchase, where we shall debit, business purchase. So here we shall debit, isn't it? And then now all those other liabilities we credit. So we shall get this figure. So in this case here, the other liabilities, like for example, the first one there is what we are calling, the bank overdraft. Are you able to see the bank overdraft? Hey, you good ninjas. Bank overdraft. Are you able to see the amount for bank overdraft? I don't have to keep on sharing my screen because you are picking this from book value. 775.8. 775.8. 775.8 I'm crediting. All right. From there, ladies and gentlemen, we have another current liability called payables. Payables, called the payables. So payables, how much do we have? From my book here, I can see I have 1962, the year that I was born, 1962. After payables, I can see we have tax obligation. Tax obligation. So the tax obligation, we have 275.1. 275.1. And that is it. Please give me the total here. Please give me the total here. Please give me the total here. That one I can assure it's 111 mark. You'll be surprised. You'll end up getting more than 10. You'll be surprised. So they're giving me a figure of 3012.9. So don't write like total, no. 3012.9 is what you write here. Being recognition of what here? Liabilities in the books of Zawadi Limited. In the books of Zawadi Limited. So are we okay up to there, ladies and gentlemen? Are we okay up to there, ladies and gentlemen? All right. Now, from there, ladies and gentlemen, we need straight away to go and get goodwill. How do we get goodwill? The last step, although in an exam, I'll not even do that working at all. Why? You can't be correct. Why are you bothered with useless things? We are in this world here to add value, but just to show you like what is happening. So for goodwill, first of all, give me the net assets. Give me the net assets here. How do we get net assets? It is the assets that you have minus these liabilities. So the assets that you guys were able to record up there were 11,599. The assets you guys were able to record, 11. Do you remember this figure of assets which you were able to record and you added? 11,599. And then you come and subtract this from liabilities. Liabilities of how much? 3012.9, like that. So you're able to give me the net assets acquired. Are you able to give me the net assets acquired? Net assets acquired. They're giving me 86.1. 86.1. And then now come and remember we have taught you this in group consolidation. You have to look at the purchase consideration. Here, purchase consideration. So purchase consideration equals who? Are you able to remember the total figure that we got for purchase consideration? Business purchase. How much was it coming to? 10,450, isn't it? So 10,450. So this 10,450. So you subtract this to be able to get goodwill. I can't do this on an exam. I cannot do this. I can't do this. I can assure you if you start doing this, I'm so sorry to tell you the truth, I will teach you again next semester. Because I know for AFR, the most important thing is for you to know how to manage your time. If you know how to manage your time, that will be it. That will be it. So then I should be able to come here, if you really want this, purchase. So to record goodwill, so I should be able to come here and debit, in this case here, goodwill, and then I'll credit business purchase. Credit business purchase. So this one is 1863.9, 1863.9. And now that is the end of your journal entries. Most importantly, have you been able to pick like those areas with low hanging marks? Recognition of assets and liabilities. That is where you get all your marks, all of them. I'll even start with that. I'll open just a new fresh page here and say straight away recognition of assets here. Right? The assets given there, recognize them at takeover values. Recognize in this case here liabilities. And then hapo chini umeandikia to recognize goodwill. At least umeandika kitu. So hata ukienda huko chini ile naona wanafunzi wanaandika sana. Hata ukienda huko chini kabisa ukisema naona wanafunzi wakiandika kitu sana. And God bless the work of my hands. For sure God will be able to see now the work you've done. At least some work has been done there. The students who don't write anything apart from down there will put a God bless the work of my hands. We shall overcome. We shall overcome. We shall overcome. We shall overcome. Now, the other one that I would always want you guys to ensure that you do, please never miss to do this. 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 This is very important for you. This one here. Here now you get like all the marks without also knowing what you are doing. Statement of financial position of Zawadi as at 1st 2016. You normally get all the marks here. So you start by writing in capital letters, Zawadi Limited. Statement of financial position, Zawadi Limited. Zawadi Limited, Zawadi Limited, Zawadi Limited, Zawadi Limited, Zawadi Limited. Statement of financial position, don't call it balance sheet. Statement of financial position as at date, of course, they must give you the date. As at 1st April 2016. And then you begin your usual journey with non-current assets. You begin your usual journey with non-current assets. Already you have recorded them in the journals. Non-current assets, already you have recorded them in your journals. So you have property, plant, and equipment. You have property, plant, and equipment. Property, plant, and equipment, free mark. Are you able to see the amount that I'm going to book this thing at? Are you able to see the amount that I'm going to pick this thing at? Already you have everything. You already have everything. 9486.8. 9486.8. From there, ladies and gentlemen, we have in this case here available for sale. Available for sale. So the available for sale in this case here is 800 what year? 810, isn't it? 810. From there, we have our famous goodwill. Goodwill. Go and do it, you as the examiner. Why did you ask me to do it? But because you have done it, let's just put it there. So we got 1863.9. Because you have done it, but yourself will not do it at all. So again, don't write like all the assets. No, you need to know to categorize them. Now you need to come here and say, current what year? You have current assets here. You have current assets here. So current assets, what do we have, ladies and gentlemen, here? We have inventory. Inventory. We have inventory. We have inventory. Inventory of how much? Inventory of how much? 608.7. 608.7. That's in inventory. From there, ladies and gentlemen, we have receivables. 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 Receivables of how much? Receivables of how much? 477.1. From there, ladies and gentlemen, we have financial assets. Financial assets of 216.4. Financial assets of 216.4. So this gives us how much in terms of total assets. This gives us how much in terms of total assets. This gives us how much in terms of total assets. From the beginning, all of them, you add. Cheryl, 13,462.9. Cheryl is the one who reminded me that I need to buy my wife something. Doesn't have to be lunch. It can be dinner. It can be dinner. But now with CASNEB exams at the corner, that dinner can only come after exams. She'll have to understand. Equity. 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 Equity and liabilities. So now we have equity, equity, and liabilities. So we begin with equity first of all. So equity, are you able to remember ordinary share capital? Ordinary share capital, are you able to remember the ordinary share capital? Already we computed this. We computed this. It was 70 something. We have computed this. It was 70 something. 7052. I can see someone laughing there because you know you can't get this right in an exam. Hii inapotelea mbali. All right. All right. Hiyo section huwezi ukapata. Hata ya preference shares, hii unaachana nayo. Preference shares, kama unamwandikia figure tu yoyote hata yaone kwa struggle kidogo. Preference shares 1600. 1600, yes. 1600. Thank you so much. From there, ladies and gentlemen, we have in this case here somebody saying liquidation, no, but it's good you have reminded me. Non-current liabilities. Non-current liabilities. So non-current liabilities, what do we have here? We have our debentures. Do you remember our debentures? Do you remember debentures? 1768. Debentures debentures 1768, debentures 1768. From there, we have current liabilities now. Current liabilities. So current liabilities, what do we have here under current liabilities? We have payables. Are you able to remember the payables? Payables, where I'm alone. Nima. 1962. Wanasema 1962. Payables, 1962. After payables, ladies and gentlemen, we have tax. Tax, I can see this 275.1. 275.1. From there, we have bank overdraft. Are you able to remember the bank overdraft? So bank overdraft, ladies and gentlemen, we have our usual bank overdraft, which was 775.8. But now remember that this company is branding. It doesn't have any money of its own. It must have borrowed that 30. So this 30, it is either you put it here under the bank overdraft or under debentures. We normally take it as a current asset because it is being a current liability, because it is being in a card like almost immediately. So if you take this 30 plus this, what figure are we getting? Somebody there, 805. 805.8. So you come and add. It must be exactly equal to this 13,462.9. Must be exactly equal to that. Exactly equal. Balanced, yes. But remember, if there is any day that you guys have made a mistake, is today, because the objective of this class is not to balance questions. No. To me, like now, this question, the way we mark it, I'm 100% honest. 100% honest. This is what my students here would have done. Wangepata i correct. Wakija pande in wrong. Wangepata i correct. Hata hii bank overdraft, watakumbuka hii ni wrong. But now count the number of ticks and remember each tick has got 1, 1, 1, 1. Number of ticks will be 1, 2, 3, 4, 5, 6. Any 6 at 1. So you'll end up getting 6 out of what here? 6 out of 6. And then you get, in this case here, an award. People will think you are very clever, but you knew how to really play your card, You knew how to play your cards. Now ask questions, the questions you guys were asking. You always concentrate on the straightforward entries. In each of those topics, always concentrate on the straightforward topics. Marks, straightforward marks. So have you guys been able to pick something out of what I've done? Have you been able to pick? Are you confident now that if they bring external, you'll be able to do like realization account, not the whole of it, a skeleton. Be a skeleton kind of a person in AFR. You'll go places. You see, like I told you, like myself during the times they were calling it Financial Accounting 4. I got an award with CASNEM. When I did ACCA SBR, I was number 19 globally. This June, I'm going to do a paper called Diploma in IFRS, June. Diploma in IFRS. And I can assure you 100% I'll be the best student in the whole world. Diploma in IFRS. I'll be able to show you my certificate because they show marks there. And I'm not a genius. It's because I know the way of getting free marks. I'll be able to fetch all of them very fast. Go to the theories, fetch again most of them because theories are not very hard. I fetch most of them. If I get some time, now I can go back and start doing what here? Refining. I even don't refine those things. I'm among those guys who will walk out of the exam before time is up. Because I do my best and leave the rest, in this case here, to go. But for you, because I know you have not been studying, you would want you to stay in that exam room for 3 hours. Don't be a champion. Don't start being a ninja. And yet you are going to start to study today. It will bring you problems. All right. We need this on Monday. Which one on Monday? Congratulations in advance. Thank you so much. Great. Yeah, it's good to have that kind of confidence. Now, how about internal reconstruction? Do you guys have a rough idea, like the free marks, or do you want me to go through it? Internal reconstruction, do you have a rough idea, like how you should be able to harvest, how you create those schemes? Do you have a rough idea, or do you want Mwalimu to create? Or we go through it, eh? Okay, all right. So then that is it, ladies and gentlemen. It has been a pleasure hosting you from exactly one, and I'm so delighted to see that over 100 students came on board. So if you'd want to join us, if you'd want to join our special division classes, our block release, please don't hesitate. The ones who haven't yet done that, this is the best institution in East and Central Africa. This is our number. Call us like today. Otherwise, you'll miss so many things. And then you start looking for me next semester. I don't want you to look for me next semester for AFR. Next semester, I want all of us to be in serious papers, like BDA. This AFR, AFR is not a tough paper. No. Those ones, no. Serious level. Adjust the board. Already, we have finished Cheryl. Now we are going. Oh, as I read the number, Cheryl, you are a true friend. Asante sana. Bye-bye. Please continue studying. We are going to meet for AFM at what time? No, wako sawa, hawajapotea. I'm 100% hawajapotea. I hope the approach is the same. Hawajapotea. Tuko sawa. Mwalimu was my student, so I'm so sure the approach is the same. Of course, he must have done his own research, but the approach is the same. Otherwise, thank you very much. Tuonane sangapi? Tuonane 4 to 6. Please keep time. Today, you guys came in a bit late. 4 to 6 for financial management. It's about international finance. It's about dollars. Somebody come with dollars in your pocket. Come with some dollars for demonstration in your pocket, because it's going to be lit. It's going to be nice. 4 to 6 p.m. Thank you so much. So see you later. 4 to 6. I'm somewhere now. Great. Thanks, Alango. Great. Do we have any new student who has never seen this Mwalimu before? This is the very first time you are seeing this Mwalimu. I tell you something. Is there any new student who has never seen this Mwalimu before? That this is the very first time you are seeing this Mwalimu. Is there any? I'm waiting to see whether there is that kind of a new student who is seeing Mwalimu today for the very first time. There is none. Such a student would have gotten the buzz. We shall overcome. Let's keep on talking. Most of them are ninjas. For this topic, you are new. Okay. But I hope, Mackenzie, you have been able to understand. I saw you ask some questions up there, but I hope you've been able to understand something, Mackenzie. Mackenzie, have you been able to pick something, or are you coming out of this class 100% zero? Thank you so much. Okay, then. Frida Ngati, wewe ni ninja.